Now let us discuss the past examination questions and the questions of the revisionary test papers and the mock test papers. So here first question is, examine whether the suppliers are eligible for composition levy under section 10 in the following independent cases in the beginning of the current financial year. So they do want to know whether they are eligible for composition scheme or not. Number one is Neon Enterprises. Neon Enterprises is registered in Jalandhar, Punjab, is engaged in manufacturing computer systems. So they are what? The manufacturers. They are what? The manufacturers. They are in Punjab. They are in Punjab. And its aggregate turnover in the preceding financial year is rupees 125 lakhs. The information is relating to aggregate turnover does not exceed 1.5 crores. Neon Enterprises supplies computer systems manufactured by it within the state of Punjab only. So it's making only intra-state supply. With a view to expand its business operations, to also starts providing repairing services of computer systems in the current financial year. So whether they are eligible under composition scheme or not, yes, they are eligible. Yes, they are what? Eligible under composition scheme. Under composition scheme, under section 10.1 and 10.2. Why? As a aggregate turnover does not exceed rupees 1.5 crores in the preceding financial year, they are eligible. And here, as we have already seen that here, if the composition supplier, they can supply marginal services. How much? Of 10% of the aggregate turnover of the preceding financial year, or rupees 5 lakhs. Or rupees 5 lakhs. Say which is more. So here they can supply these repairing services to the tune of 12,50,000 rupees. They can supply the repairing services to the tune of 12,50,000 rupees. Let us see the answer. The turnover limit of the eligible for being eligible for composition scheme under 10.1 and 10.2 for Jalandhar, Punjab is rupees 1.5 crores in the preceding financial year, as I have already told you. Thus, Neon Enterprises can opt for composition scheme as its aggregate turnover does not exceed 1.5 crores in the preceding financial year. It is also making an intrastate supplies. Further, since the registered person opting for composition scheme can supply services, they can supply marginal services other than restaurant services of value up to 10% of the turnover in the preceding financial year, or rupees 5 lakhs, which is higher. Therefore, they can supply services of 12,50,000 rupees. Thus, Neon Enterprises is eligible to opt for composition scheme. So, your concepts must be very much clear. Next one is B. Next question B. Mr. Rajesh and Sons. Mr. Rajesh and Sons, registered in New Delhi. Registered in Delhi. So here owns a restaurant, Tasty Foods, with a turnover of rupees 1112 lakhs in the preceding financial year. So the aggregate turnover does not exceed rupees 1.5 crores. Okay. In view of growing customers' demand, it also starts intrastate trading of juices in Delhi. They are now engaged in what? Intrastate trading of juices in Delhi. Whether they are eligible to opt for, say, composition scheme or not. So they are engaged in providing restaurant services. And they want to do intrastate trading of goods. So they can supply here goods also, besides being supplying the restaurant services. So they will be what? Eligible to opt for composition scheme as their turnover in the preceding financial year does not exceed rupees 1.5 crores. Suppliers basically engage in restaurant services, which is eligible under section 10(1) and 10(2), and supplier wants to engage in trading of goods, which is also eligible supply under, say, composition scheme. Trading of goods is, say, also eligible supply under composition scheme. Therefore, Rajesh and Sons is what? Eligible for composition scheme under 10(1) and 10(2). Next is Ghansham Associates, registered in Sikkim. As soon as Sikkim comes in your mind, the aggregate turnover in preceding financial year must be what? Must not exceed rupees 75 lakhs. So Ghansham Associates registered in Sikkim engaged in running food chain, veg kitchen in the state. They are running, say, engaged in running food chain, veg kitchen in the state. It has turnover of rupees 73 lakhs in the preceding financial year. Okay, so it is within the permissible limit. In current financial year, decides to shut down the food chain owing to huge losses incurred in the said business. Instead, starts providing intra-state architect services. Now here, they are what? Providing, say, restaurant services. Only restaurant services are eligible under section 10(1) and 10(2). Okay, they cannot supply other services. Other services are not covered under 10(1) and 2. Hence, they cannot opt for composition scheme. Under 10(2)A, you can go for these services, but for 10(2)A, the aggregate turnover, if you are an exclusive service supplier, if your service supplier exceeds, the marginal limit of 10% of the turnover in the preceding financial year or 5 lakhs, then you have to go for 10(2)A, where aggregate turnover in a preceding financial year, aggregate turnover in preceding financial year must not exceed rupees 50 lakhs. It must not exceed rupees what? 50 lakhs. In this case, since the aggregate turnover is rupees 73 lakhs, therefore, in the preceding financial year is 73 lakhs, therefore they will not be eligible to opt for composition scheme. So let us see here the turnover limit for eligible for composition scheme under 10(1) and 10(2) for Sikkim is rupees 75 lakhs in the preceding financial year. However, registered person who is exclusively engaged, in case he is exclusively engaged in supplying services other than restaurant services, they are not eligible for the said composition scheme. They are, in case they are exclusively engaged in supplying services. Thus, Ghansham and Associates cannot offer composition scheme under 10(1) and 10(2). However, the benefit of composition scheme under 10(2)A is available in case of registered person who is not eligible to pay tax under 10(1) and 10(2), provided his aggregate turnover does not exceed rupees 50 lakhs in the preceding financial year. But since in this case their aggregate turnover in the preceding financial year is rupees 73 lakhs, therefore they won't be eligible to opt for composition scheme under 10(2)A. Thus, in view of the above mentioned provisions, Ghansham and Associates cannot avail the benefit of composition scheme under 10(2)A. Also, if this aggregate turnover in the preceding financial year exceeds rupees what? 50 lakhs. Next is Kirti Services Limited. They are registered in Uttarakhand. Uttarakhand, the aggregate threshold limit is rupees 75 lakhs. Exclusively for providing hair styling services and turnover of 34 lakhs in the preceding financial year. There is no difficulty here. However, the answer, would your answer, whether if they will be eligible, they won't be eligible under 10(1), but they will be eligible under 10(2)A. 10(2)A is their aggregate turnover does not exceed rupees 50 lakhs in the preceding financial year. So they will be eligible to opt for composition scheme because the aggregate turnover is rupees 34 lakhs. Will your answer be different if Kirti Services Limited also start supplying beauty products along with the providing hair styling services in the current financial year. So they can supply beauty products also, but within the overall up to the aggregate turnover of rupees say 50 lakhs. So here a service provider can opt for say composition scheme under 10.1 and 10.2 only if they engage in supplying restaurant service, as we have already discussed. The said scheme permits only supply of marginal services for a specified value, but only when the same is supplied along with goods or say restaurant services. Since Kirti and Services Limited is exclusively engaged in supply of services other than restaurant services, they are not eligible for composition scheme under 10.1 and 10.2, even though the turnover in the preceding financial year is less than, does not exceed rupees 75 lakhs. Okay. Then, however, since Kirti Services is not eligible to opt for composition scheme under 10.1 and 10.2 and its aggregate turnover in the preceding financial year under does not exceed rupees 50 lakhs, Kirti and Services, they will be entitled to avail the benefit of the exemption, benefit of the composition scheme under 10.2A. Further, the answer will remain same even if they are they have started supplying beauty products along with the hair styling services in the current financial year, since it fulfills the conditions which have been laid down under 10.2A, as their aggregate turnover does not exceed rupees 50 lakhs. Okay, they will be eligible to opt under 10.2A till their aggregate turnover in the current financial year does not exceed rupees 50 lakhs. Next question, let us see here. This has been asked for 3 marks in November 2018 examination. So MN Limited has registered 2 business verticals. They have 2 registered business verticals in the state of Haryana. They are operating in the state of Haryana. Its aggregate turnover in both the businesses does not exceed rupees 150 lakhs. Okay. It wishes to opt for composition levy for one of the verticals in the current year and want to continue with registration and pay tax at normal rate with the second vertical. Can it do so? No. Answer is no. Why? In case if a person opts for composition scheme in respect of its vertical, in respect of any vertical, then he has to go for composition scheme for all of its verticals. If he goes for normal scheme for any vertical, then he cannot go for composition scheme for the other verticals. So, composition scheme will apply for all verticals, all transactions of registered persons. So, its composition scheme applies for all transactions of registered persons. So, a registered person with aggregate turnover in the preceding financial year, a registered person with aggregate turnover in preceding financial year up to rupees 1.5 crores is eligible for composition levy. Since the aggregate turnover of MN Limited does not exceed 1.5 crores, is basically eligible for composition levy. How it's applicable for all the transactions of a registered person having same permanent account number. So you will get 1 marks here, say 1 marks here, and the last one is for 1 marks. Thus MN Limited have option to for levy of composition scheme for both verticals or normal levy for say both the verticals. So if registered person opts for normal scheme for one vertical, this is a very important, the main crux is if the registered person opts for normal scheme for one of its vertical, other verticals automatically becomes ineligible for say composition levy. Now let us discuss one more question. A Limited is a manufacturing concern in Sikkim. Let the financial year, doesn't matter here, let the financial year be 20XXXY. This is the preceding financial year. And 20XYXZ is the current financial year. You can do this way also because it will not change. This is the current financial year. Therefore, institute also do in this manner only. So, A Limited is manufacturing concern in Sikkim. So, it's what? A manufacturing concern. In financial year 20XXXY, the total value of the business in financial year 20XXXY the total value of supplies, including inward supplies taxed under reverse charge mechanism, is 9 lakhs. Exclusive of taxes, the breakup of the supplies they have provided whether A Limited will be eligible to opt for composition scheme. So in case of Sikkim, they will be eligible to opt for composition scheme if their aggregate turnover in preceding financial year does not exceed rupees 75 lakhs. Okay, and here remember that aggregate turnover does not include what? Does not include, one is, the value of inward supplies, on which tax is payable under RCM, that is not included. Besides this, here if you services supplied by way of extending loans or advances where the consideration is represented by way of interest or discount. Consideration is represented by way of interest or discount. These are the exempt supplies, exempt services. Okay, represented by way of interest or discount. That you remember. So here, let us compute the aggregate turnover. So interest rate supplies made under forward charge, this will be included. Interest rate supplies which are chargeable with nil rate of GST, this will also be included since it comes under the ambit of exempt supply. Interest rate supply which is wholly exempt, this will be included in the aggregate turnover. Value of exempt supply of services being interest on earned on fixed deposits with bank, this will not be included. Value of exempt supply of services being interest earned on fixed deposits with bank, the same will not be included. Value of supplies on which tax is payable under RCM, this will not be included. Now here the aggregate turnover is say 3 into 5 and 75 lakhs. The aggregate turnover is 75 lakhs, it does not exceed 75 lakhs. Therefore, A Limited will be eligible to opt for composition scheme. So let us see a registered person whose aggregate turnover in the preceding financial year does not exceed rupees 75 lakhs in the state of Sikkim may opt for composition scheme. And basically as per section 2.6, aggregate turnover means aggregate value of all taxable supplies, excluding value of inward supply on which tax is payable under RCM, exempt supplies, exports, interstate supplies, having the same permanent account number, the same is to be computed on all India basis, exclude central tax, state tax, union territory tax and the integrated tax. Now according to explanation 1, for the purpose of computing the aggregate turnover for purpose of determining the eligibility to pay tax under section 10, aggregate turnover shall not include the value of exempt supply of services provided by way of extending deposits, loans or advances. Deposits, loans or advances insofar as the consideration is represented by way of interest or discount. So here the aggregate turnover is which we already calculated is 75 lakhs. Since the aggregate turnover does not exceed to be 75 lakhs in the preceding financial year, A Limited will be eligible to opt for composition scheme. Now let us discuss one more question. A Limited is a manufacturing concern. A Limited is a manufacturing concern in Rajasthan. A Limited as a manufacturing concern in Rajasthan has opted for composition scheme, furnishes you with the following supplies for the financial year, the current financial year, that is 22-23 is the financial year is 20x6xy, okay. Then it requires to determine the composition tax liability and the total tax liability. Breakup of supplies is, so it is eligible basically. So manufacturing concern will be required to pay tax, will be required to pay composition tax at rate of 1% of turnover, 1% of turnover in the state or union territory in which 0.5% is the CGST element, composition tax, and 0.5% is the SGST element. And here they will not be required to pay tax in case in computing the turnover in state or union territory, the value of exempt services of extending deposits, loans or advances represented by way of interest or discount. Consideration is in form of interest or discount. Same will not be included. Same will not be included. So let us now calculate the, basically here, the turnover on which they are required to pay composition tax, that is intra-state supplies of goods X, which is chargeable with 5% GST. This will be included 20 lakh rupees. Intra-state supplies which are chargeable with nil rate of GST, this will come under the ambit of exempt supply, will be included. This will be coming under the ambit of exempt supply. This will be included. Interstate supplies which are wholly exempt under 11, this will also be included. This will also be included. Value of inward supply on which tax is payable under reverse charge basis. Value of inward supply on which tax is payable under reverse charge basis. This will not be included for the purpose of composition tax, but tax will be paid by us under reverse charge mechanism. Interstate supplies of goods Y chargeable with 18% GST. Chargeable with the 18% GST. So here your turnover in the state or union territory, turnover in a state will be how much? That is 20 plus 15, 35 plus 5, 40 and 55 lakhs. It is 55 lakhs. And rate of tax is 1%, 0.5% in the CGST element and 0.5% in the SGST element. So this is 55,000 rupees. This is 55,000 rupees. And tax payable under RCM. Tax payable under RCM. 8 lakhs is a turnover into 12%. That is 96,000 rupees. So the aggregate will be aggregate tax liability, all is to be paid through e-cash ledger. That will be 151. Let us see whether our calculation is correct. 55,000 is here, 55,000 is here, and 96,000 is here. Total tax liability is 151. So this way you have to calculate it. Now here let us discuss more question. Mr. Hira Lal and Sons is registered in Karnataka, and they have opted for the benefit of the composition scheme. Hira Lal Sons is registered in Karnataka and they have opted for the benefit of composition scheme and furnished the following details for the tax period ended 30th of the June. Okay. Then here their taxable turnover within the state is, and exempted turnover is this, total turnover is this during this particular tax period, tax quarter. Upon using the information above, calculate GST, no need to bifurcate between CGST and SGST to be paid by firm for the tax period ending 36/23 in the following independent situations. In case Hira Lal and Sons is a manufacturer, and in case Hira Lal and Sons is a trader. So in case Hira Lal and Sons is a manufacturer, it will be required to pay 0.5% CGST plus 0.5% SGST of the turnover in the state. Now here If for calculating turnover in the state, it will include taxable supplies as well as the exempt supplies. As well as exempt supplies in case of manufacturer. Since he is a manufacturer. For manufacturer we are seeing now. So here it will be 1% of 32 lakh rupees. So your answer will be 32,000 rupees in this case. But for trader, you have to take the taxable value of supplies. Taxable value of supplies of goods and services. You have to take taxable value of supplies. Rate is only 1% of taxable value of supply of goods and services. 1%, 0.5% is a CGST element and 0.5% is a SGST element. So in case of a trader, it will be 1% of rupees 17 lakhs only, because exempted turnover will not be counted here. Exempted turnover will not be counted. So if he is a trader, it will be liable to pay tax of 17,000. Composition tax will be of 17,000. So in case of the manufacturer, composition tax will be what? 1% of the turnover in the state. The exempted goods turnover will be included for determination of what the composition tax liability of the manufacturer. In case of trader, the composition tax will be levied at rate of 1% of the turnover of taxable supplies of goods and services in the state. Thus exempted turnover will not be, say, included for determination of the composition tax liability. So 1 mark will be there, 1 mark will be here. Thus the composition tax liability will be determined as under. So basically for manufacturer it will be 32,000 rupees and for trader it will be 15,000 rupees. Okay. I have done it 17, it is wrong. Basically it must be 15 is a taxable turnover. So exempt supply will not be included. So it will be 15,000 rupees. Okay. Next is Mr. Yash. Mr. Yash, doing business in Kerala, commenced business in the month of April. Now, April they have commenced the business. The aggregate turnover in preceding FY is nil. Now, from April to June, they have commenced their business. His interstate turnover for the first 2 quarters, they are doing in Kerala. April to June is 20 lakhs and July to September is 100 lakhs. In each of the quarter, exempt supply was made 25% of the total turnover for the said quarter. Okay. Since the product supplied by him, now they are saying since the product, that means he is a trader. He is a trader. Since the product supplied by him is eligible for composition scheme, he has opted for registration with effect from 1st of July. Now, this question drafting may be a bit, different. We may presume that the threshold limit, okay, for basically threshold limit for registration there in the state of Kerala for exclusive supplier of goods is rupees 40 lakhs. So maybe whatever the case may be, here they have opted with effect from 1st of July. Therefore, we have to do with that in that manner only. Okay. Now they are asking if you are required to compute the tax payable by Yash from the above information. If he is a manufacturer. So here, first of all, they will be eligible for composition scheme. Now, in computing the tax liability, the turnover from 1st April of financial year up to the date when he gets registered will not be included. Will not be included. So this will not be included. So here 20 lakhs will not be included. In case of manufacturer, as I already told you, they will be required to pay tax 0.5% CGST element plus 0.5% SGST element plus SGST element of the turnover in the state, which includes both taxable supplies as well as say exempt supplies. So in this case, when he is a manufacturer, it will be required to pay 1% of rupees 100 lakhs, that is 1 lakh rupees. But for a trader, exempt supplies will not be included. So it will be 1% of turnover of taxable supplies of goods and services. Now here the turnover is rupees 100 lakhs, which has been effected in the second quarter. Exempt supply is 25 lakhs. So turnover of taxable supplies $75 lakhs. Turnover taxable supplies 75 lakhs. 1% of the same, it is what? 75,000 rupees. Let us see. Now section 10(1) of the CGST Act provides a registered person this is a 5 marks which has been asked in July 21. In case if their aggregate turnover in the preceding financial year does not exceed rupees 1.5 crores in the state of Kerala, will be eligible to opt for composition scheme. Then according to as per section 10(3), the benefit of composition scheme can be availed up to aggregate turnover of rupees 1.5 crores and the option availed by a registered person shall lapse with effect from the day on which the aggregate turnover exceeds rupees 1.5 crores. According to explanation 2, for the purpose of determining the tax payable, the expression turnover in the state or union territory shall not include what? The value of the following supplies, that is supplies made from 1st April of the financial year up to the date when the person becomes liable for registration under the Act. They have date. And number 2 is the exempt supply of services by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. And the applicable rate of tax is 1% in case of turnover of 1% of turnover in state or union territory in case of manufacturer, and 1% of taxable supplies of goods and services in the state of union territory. 1% of taxable supplies of goods and services in the state or union territory in case of trader. It is taxable. Okay. So therefore, yes, will be eligible to pay tax under composition scheme up to rupees 150 lakhs, and his liability will be what? In case he is a manufacturer, CGST element and SGST element is 50,000 rupees, and in case of a trader, it will be what? 37,500 and 37,500 CGST and SGST element will be there. Now let us discuss one more question that has been asked for 5 marks in November 2019 exam. Mr. Rajbir, a registered person at Delhi. Rajbir is a registered person at Delhi. Is in the business of selling goods relating to interior decoration under the firm name Measures Rajbir and Sons. So he is a registered person and he has opted for the composition scheme, and his turnover is rupees 80 lakhs and is expected to be 130 lakhs in the financial year, next financial year. Now here, whether he will be eligible to enjoy the benefit of composition scheme, since he is in Delhi, the person will be eligible to avail the benefit of composition scheme if the aggregate turnover in the preceding financial year does not exceed rupees 1.5 crores. Okay. And since Mr. Rajbir's aggregate turnover is rupees 80 lakhs in preceding financial year, it will be eligible to opt for, say, composition scheme. Will be eligible. He will be eligible. Okay. Up to what lakh? Up to the turnover of rupees 150 lakhs. Then further, hence it will be eligible. His son Karan wants to start business of providing services relating to interior decoration after completing of post-graduation in interior course in the same firm, named Rajbir and Sons, with effect from 1st of April 23, and wants to enjoy the benefit of composition scheme. So if they want to enter Mr. Karan as a, in the same business, so here it will become, say, a partnership firm, and this partnership firm will have a, say, PAN. They have to take a new permanent account number. PAN based registration has been granted under GST. Then this will be, the requirement. Beside this, otherwise also he can supply marginal services. Marginal services up to what? 10% of the aggregate turnover in the preceding financial year. So only 8 lakh rupees services can be supplied here. So it's better that Karan goes for composition scheme separately under section 10 to A. Under section 10 to A. It is better he should go for 10 to A. In case, since his aggregate turnover does not exceed rupees 50 lakhs, he will be eligible under 10 to A and pay tax accordingly. So registered person within aggregate turnover up to rupees 1.5 crores is eligible for composition levy in Delhi, and the aggregate turnover of Rajbir and does not exceed what? Rupees 1.5 crores in the preceding financial year, he is eligible for composition levy in the current year. That we have to write. Composition scheme under 10(1) is not meant for supplier of services. However, a composition supplier may supply services of value not exceeding 10% of turnover in the state or union territory in the preceding financial year, or 5 lakh rupees, which is higher. So if Karan wishes to start the business of providing services relating to interior decorator under same firm as the Rajbir and Sons, the sole proprietorship firm needs to first convert into partnership firm. New registration under PAN, under new PAN will be required to be, say, obtained. Thus, if his Karan wants to join the same firm, interior decorator service can be provided up to 10% of 80 lakhs or 5 lakhs, which I say higher, subject to maximum is 8 lakh rupees. Then, in order to provide the benefit of exclusive service supply, they have told a scheme to pay tax at concessional rate has been formulated primarily for small service providers, basically who are not eligible under 10(1) and 10(2). They can go for 10(2)A. They can supply services if their aggregate turnover in the preceding financial year does not exceed rupees 50 lakhs. They will supply services up to rupees 50 lakhs. Rate of GST, rate of composition tax is what? 6% in this case. 3% is the CGST element and 3% is the SGST element. Okay. So thus we have advised Mr. Karan to open his own firm providing interior decorator service and avail the benefit of the concessional rate of tax under 10(2)A of the CGST Act. Then next question was asked for 4 marks. Ranveer Industries registered in Himachal Pradesh. They are registered in Himachal Pradesh. Is engaged in supplying interstate supplies. interstate supplies of ready-made garments. The aggregate turnover of Ranveer Industries in financial year 21-22 is rupees 70 lakhs. Aggregate turnover is rupees 70 lakhs and opted for composition levy and paid tax for the quarter ending September 22. Now, in case interstate supplier of goods cannot opt for composition levy. They cannot opt for composition levy. They are paid under composition levy. Proper officer has levied penalty for wrong availment in addition to the tax payable by it. Is examine the action of the validity of the proper officer. So the action taken by proper officer is correct in law. According to section 10(2), interstate suppliers of goods are not eligible for composition scheme. In this case, Ranveer Industries is engaged in interstate supply of ready-made garments. Therefore, it won't be eligible for composition scheme. As it has opted for composition scheme but was not eligible, therefore proper officer can recover the tax and can also levy penalty by issuing a show cause notice as per the provisions of section 73 and 74. They will determine the applicable tax and penalty. Now, next question is, X started profession of architect with effect from 1st of April. Then his value of intrastate supplies up to 30th September was 20 lakhs. So it is threshold limit. He applied for registration on 1st of October, okay, and opted for composition scheme for the suppliers as per 10(2)(a) in the registration application and was granted registration as per the provisions of GST law. Then he made intrastate supplies of 35 lakhs for the quarter ended 31st of December. You are required to determine his composition tax liability under 10(2)(a) from this period. Normal GST rate is 18%. Now here up to rupees 20 lakhs. That is the threshold limit of registration. His GST liability will be what? Nil. Then, under 10(2)(a), the aggregate value of supplies is rupees 50 lakhs, where you will be eligible, where we have to pay 3% CGST element and 3% say SGST element. So here till 30 lakh rupees, till your turnover reaches 30 lakh rupees, CGST element will be 30 lakhs into 3%. 90,000 is the CGST element and 90,000 is the SGST element. 90,000 is the CGST element and 90,000 is the SGST element. Okay. 50 they have reached. Then further they have made supplies. 35 lakhs is the supply. 5 lakhs they will be required to pay tax under the normal scheme. They won't be eligible for composition now because the turnover, aggregate turnover has already crossed the threshold of 50 lakhs. So on 5 lakh rupees they will be required to pay 9% CGST and 9% say SGST. So for 9.5 the 45,000 is the CGST and 5.5 the 45,000 is the SGST. So first of all you have to write here, as per section 10(2)(a), if a registered person is eligible to take the benefit of composition scheme, he shall pay tax at the rate of 6% of his aggregate turnover, first supplies of goods or services up to rupees 50 lakhs. For first supplies of goods or services or both shall for the purpose of determination of tax payable under the 10(2)(a) shall not include supplies from 1st April of the financial year up to the date when he becomes say liable for registration. And where supplier has taken registration for the first time, the presumptive tax rate of 6% shall be payable on supplies made say by him only after the date of registration up to aggregate turnover of rupees 50 lakhs. The circumposition tax liability on 30 lakh rupees will be 6%, 180, CGST is 90,000 and SGST is the 90,000. Then after reaching the aggregate turnover of 50 lakhs, his option to pay tax under composition scheme will lapse and he has to pay tax at normal rates. Thus, he will be required to pay tax on 5 lakh rupees at rate of 9%. 45,000 is the CGST element and 45,000 is the SGST element. Next question is more or less similar. Mr. Ajay has registered a repair center where electronic goods are repaired and serviced. His repair center is located in state of Rajasthan and he is not engaged in any making interstate supply of services. Aggregate turnover in preceding financial year is 45 lakhs. So you can go for 10 to A. With reference to the provisions of CGST Act, examine whether Ajay can opt for composition scheme under 10.1 in current financial year. No, because it is not meant, 10.1 is not meant for exclusive supplier of services. It is meant for supplier of goods and services where they can supply marginal services of 10% of the aggregate turnover of the preceding financial year, rupees 5 lakhs, which is more. So basically 10.1 is not applicable here. If his aggregate turnover is rupees 35 lakhs, whether he will be eligible under 10.2A? Yes. And on 35 lakhs up to 20 lakh rupees, he will be required to pay nil tax. Then on remaining 15 lakh rupees, he will be required to pay tax at rate of 6%. That is what? 90,000, where 45,000 is the CGST element and 45,000 is the SGST element. 45,000 is the CGST element and 45,000 is the SGST element. Will your answer be different if Ajay procures few items required for providing repair services from neighboring state? So here composition supplier can make interstate purchases but cannot effect interstate supplies. Okay. So section 10.1 of the CGST Act 2017. Section 10.1 of the CGST Act 2017 provides that a registered person whose aggregate turnover in the preceding financial year did not exceed 1.5 crores, that is 75 lakhs in the special category states of Assam, Himachal Pradesh, Jammu and Kashmir, except these states, Assam, Himachal Pradesh and Jammu and Kashmir is 1.5 crores. They may opt for the leave of tax payable by him on amount calculated at what specified rate. However, they cannot supply services other than restaurant services. They can only supply marginal amount of services. Therefore, basically, if exclusive service supply is there, they won't be eligible to opt for the composition scheme under 10.1. They will be required to pay tax under composition scheme under 10.2A. Aggregate turnover up to rupees 50 lakhs in the preceding financial year. They can go for 10.2A and their tax liability will be 6% of the turnover, basically up to rupees 50 lakhs. So here in this case, he is already registered what? In case he is already registered, then in that particular circumstance, that will be on 35 lakhs, they will be required to pay tax at rate of 6% straight away. They won't be getting the benefit of then in that particular case 20 lakhs. If he is newly registered, then he will be definitely getting. Now one question was asked, this is exam for 4 marks in May 23. This time it has been asked, Mr. X is a trader. Mr. X is a trader dealing exclusively in supply of goods and paying tax under normal scheme. Also eligible for composition scheme, submit the following details for the coming financial year. He has given the details for the coming financial year. You are required to determine which scheme is more beneficial to him, whether he should opt for, say, composition scheme. Estimated data are provided here. Now, inward supplies of goods from registered suppliers, amount is exclusive of GST and goods are chargeable at a normal rate of GST. So, here for regular scheme, and one is, say, composition scheme. Let us calculate the cost aspects. Let us see the cost. This is a cost element, inward supply. In case of regular schemes, they will be entitled to avail the input tax credit. Under normal scheme, they will be entitled to avail the input tax credit. So, effective cost will be 70 lakhs. But under composition scheme, you know, ITC will not be available. Therefore, the effective cost will be what? 70 lakhs plus 12% means 78 lakh and 40,000 rupees. Okay. Then they are saying, so outward supplies they have said to unregistered persons. Sale price is inclusive of GST. Normal rate of GST is 90. Normal rate is 12%. Here 90 lakhs is what? You know, price is inclusive of GST. Now here, let us first go for the costs. Inherent nature of expenses in both the schemes. Inherent expenses is, here is 450, here also it is 450. Beside this, books of account maintenance costs, books of accounts, here they are, on normal scheme it is 2 lakhs and here it is 75,000. Return filing, in this it is 48,000 and here also it is 12,000. This type of question has already been given in our comprehensive book. We have already given this type of questions. Some authors were telling that this has not been there. This is a new question framed by ICI. If you go for comprehensive book, similar question is there in our book. So this is 70 lakhs plus 4 lakh 50,000. This is the cost plus 2 lakhs plus 48,000. So it is 76 lakh and 98,000 is the cost here. And here it is 7840. $78 lakh 40,000 plus 4 lakh 50,000 plus 75,000 plus 12,000. So the effective cost is 8377. This is the cost. Now, what is the revenue realization here? Basically, sale price inclusive of GST is 90 lakhs. GST element is 90 lakhs into 12 divided by 112. So 90 lakhs into 12 divided by 112. 96428.6. So net realization is how much? 90 minus 964,286. That is 80, 35, 714. In composition, it is how much? 90 lakhs. In composition, this will be tax liability. If your turnover is 90 lakhs, sale price is 90 lakhs, you have to pay tax yourself. It is 90,000 at rate of 1%. So realization here is 89 lakh and 10,000. So if we go with the realization aspects, so here it is 80, 35, 714 minus 7698. You get what? 3 lakh 37,714, whereas here it is 8910 minus 898377. It is 533. So basically they must go for what? The composition scheme, as the profit margin is more. So here the profit of the dealer is 533. Therefore they must opt for the composition scheme. So basically these are the questions relating to composition scheme which we have discussed. So this was our overall discussion. This is a chapter is important, as you see many times questions has been asked, whether it's a CA exam or CMA exam or CS exam, these types of questions are asked. So these practical questions you should do, and try to make your notes also, try to solve questions by hand, so that will be much more easier. So this was all our discussion relating to the composition practical questions.